Current economic landscape is difficult. It's difficult to assess. I think if you look at the current situation, I think it has to be clear to everyone that there's been a lot of artificial propping up of the economy. There's been central banks involved. There's been other factors. Interest rates have been coming down for years now. In Europe, we've got several countries with negative interest rates, and that's a special situation. At the same time, with those low and negative interest rates, you've got a mountain of derivatives that have built up over time, and most of that mountain is probably fine, but it's very intransparent. You don't really know where the risks are, what the counterparty risks are, and the overall context is also one where there's a lot of debt. There's countries with huge debt, and all of that really factors into a situation where there's imbalances, and you want to be ready to prepare and protect yourself from those imbalances, because those imbalances have ramifications, have implications in investments in the financial markets, but it goes further than that. There's implications, for example, with regard to the topic of wealth transfer, of taxation, and all of those topics, I think, are aspects that you have to consider today, and basically going along with the mainstream choir that everything is good and fine is treacherous. I think that would be wrong. I think today the economic landscape, without going into more detail on that, I think it's just a landscape that requires more than ever risk management, wealth protection. Those are topics I think today you really have to think about, and doing that in a smart way is something that is critical, and I recommend everyone take the time to think about it and get advice and do their homework.